From the floor of the CME Group, this is Danny Riley on this Monday, March 29th. Throughout the whole floor, the markets are quiet, but that doesn't necessarily mean that there isn't volume pumping through. Last Friday, I walked by the five-year note option pit, and they had told me they had done over 100,000 options. Now, these are the interest rate products of the old Board of Trade, former Board of Trade, now part of the CME Group. And to tell you the truth, the 10-year note options had a big day, and so did the Eurodollar options. This is all related to pricing in some type of interest rate hike that we've actually been writing about in our equity report for probably the last 2 months. This seems to be new on the radar for a lot of folks over the last couple of weeks, but this is not new on the radar for us. As far as the index markets go today, we're higher, and this is also falls in line with our Mutual Fund Monday, which, if the markets close higher today, we will have been up 21 out of the last 26 Mondays. This is the stats off the hook. And then, as far as on the month, as far as the up and down days for March, let me look. We're out of the last 21 trading days, we've been higher 17 out of 21. That's a huge stat too. If we close higher today, it will be 18 out of 22, and it does look that way as we go into it. Now, the big thing is here tomorrow is going to be the Jewish holiday Passover, and as we get into the week, into the end of the week, we go into Good Friday, and then we go into the Easter holiday. Now, the big thing about this is that the last day of the quarter is Wednesday. Statistically, it's been down over the last several years, but it was up 3 in a row the last 3 years. So we're a little mixed on that. We're not sure what to think there. But what we do know is that there was an article that came out. One of the stories that we read today is titled, I'm sorry, hey Jason, can you pull that back up? Hey Jason, can you pull that back up real quick? You have to maybe clean this up a little bit if you have to. But anyways.
Wow, look at these beans.
The big story that we're looking at this morning is it's called capitulation, and it was put out by the CFTC that last week was one of the largest short covering rallies in history, and since it's been short covering volume in history, and what that meant was that is kind of what we've been talking about over the last couple of weeks. So we keep going up, that the highs tend to be narrower and narrower, and there's a ton of capitulation going on here. Well, last week, 66,000 big S&Ps were covered into the rally. This is according to the statistics from the CFTC. You can look it up, and we'll actually put up a URL to it. Andrew from Option Monster will do that for us. But what that tells us is that a lot of these shorts have thrown in the towel. Now, ordinarily, that would mean that we would be getting close to a high, and we kind of think we are. We've been putting out that 1181, 1183 level, and then the 1201 level, which are these are really good levels that we've been looking at for a while, and we still think we're going up there. But you know what the thing is, with so many up days in a row like we've had, and it's just too hard to grasp that the market can keep going up, but it is. What this has done is it's really kneecapped a lot of the traders that trade in the S&P. What the same patterns of opening up a little higher, selling off, leveling off, and rallying every day. And while we all should get a good grasp of that, it's really hard to do, because what happens is if you're not long and you're a trader, you come in looking for a trade, and generally you're looking to sell a rally, and that's what everybody's been doing, and that's what feeds the market higher. Going into the latter parts of the day and going into tomorrow and going into Wednesday, our equity report is going to point to a couple different things. One, that the market's way overdone, that the bus is too full. Two, that the statistics point to a weaker quarter end going into March. And three, that we are going to go with what we call the walkaway trade, which is that by 12 o'clock on Wednesday, we think all the buying will be used up and we'll start to trade off a little bit. Now, that doesn't mean that we're looking at a top. That just means that we're looking for some type of pullback going in on the last day of the month. But then, what we're going to be looking at, a lot of people haven't been talking about, is the first trading day of April. I think it's been up 12 out of the last 15 occasions. So, we could get a little profit taking going into that, into the end of the quarter, and then the money's going to start flowing back right in. Really, it's quiet down here. The S&P pit has about 50 locals. It's got about 6,000 big S&Ps traded, and when you take out the 180,000 volume in Globex, that makes our total volume, yeeks, right around under 700,000. That's not so good for a day like this. Listen, if we'll be back tomorrow with another update, but that's about it from here. Our big concern is that it's going to be quiet all week long. It's quiet in New York. It's a Jewish holiday. Then we go into Easter, and boom, people are going to be taking time off. I doubt they're going to be running around here.